Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're doing a stock analysis on Oracle, ticker symbol ORCL. For today's agenda, we're going to go over Q4 2021 results. We're going to look at the revenue, the debt, the free cash flow. We're going to look at shares outstanding. We're going to compare the stock price to historically and how it's moved. We're going to look at the market cap history and derive anything we can from that. And lastly, I'm going to give my thoughts on Oracle as an investment. If you don't mind doing me a favor, please hit that thumbs up button. It helps me out a ton and it means a lot to me. Now back to the content. So Oracle reported their 2021 fiscal year Q4 results on June 15th. They reported an earnings per share of $1.54 and they beat by the estimates by 21 cents. They had revenue of $11.23 billion, and that was beat by about $200 million. So good there. On the revenue side, if we look at this on a quarterly basis, we can see that their latest quarter, that May of 2021, was up about 7.5% over the 2020 numbers. So it went from 10.5 to 11.2. And then if we look 1 year back on that, it was 11.1. So slightly above the 2019 numbers. They had a dip in 2020, and then they raised again in 2021. So if we bring that out to an annual, you can see that year over year, they've slowly, they had a dip in 2020, but prior to that, they were having relatively low single digit growth year over year. Bring that back out to back to 2012. Yeah, their growth has been very low and retracting in some instances. So it is good to see that year over year they did have some growth, and even comparatively to their 2019 numbers, that revenue is growing. Looking at the gross margin, this looks to be fairly stable. Had a little dip, but not really. Same thing on the gross margin or EBITDA margin. That looks actually to expand it a little bit, so that's good to see. And there's some expansion here on the bottom line on net income. So about $3 billion more on the bottom line there. So that's awesome. Really like seeing that. If we go out to their balance sheet, I'm going to look at cash equivalents. So let's go out to quarterly, see what they have in the last quarter. So $46 billion in cash and short-term investments. We go down to current liabilities, $24 billion. Long-term liabilities, $125. So definitely not enough cash to cover that, but their total assets are greater than their total liabilities. So it's really nothing too concerning there. Definitely really big debt load. If we go down to their cash flow, let's look at free cash flow here. So cash from operations of $15.8 billion minus $2.1 billion. Let's go ahead and calculate their price to free cash flow as it sits currently. About 15.8 minus 2.1 gives us $13.7 million in free cash flow. So the market cap is at $235.4 billion here. We're going to go ahead and divide that by the $13.7 billion in free cash flow, and that will give us the price to free cash flow. That's at 17 times price to free cash flow. It doesn't sound overly expensive to me, so price to free cash flow is 17, forward P&E is at 18. So ratios don't look bad here at all. Doesn't look super expensive comparatively to the past. The last thing I want to look at here is their shares outstanding. So $2.8 billion shares outstanding. From the look of it, it looks like shares outstanding has been decreasing. So we'll expand this. Okay, that's out to 5 years. So they've gone from, let's see, in the last year, they've gone from 3.2, let's see, May of last year, 3.1 down to 2.9. So they retired about 2.5, 250 million, 3.1. So it'll be 3.1, 2.5 over 3.1 million. So $3.1 million, that gives us 8%. So they've bought back 8% of their shares in the last year. That's a really great thing to see. So awesome there. Now let's move on to stock price and what it's been doing in the last several years. So if you bought back 5 years ago, you're up, let's see, 94%. So you've doubled your money since then. If you entered into this position around the COVID low, you're still up around 68%. That was around $45. The thing I really wanted to focus in on here is after the earnings on the 15th, there was a sharp decline in the stock price. So we bring it down to the 1 day. Just today alone, there was a 5.5% decrease on this stock. So that's a pretty decent chunk of their market cap was taken away in a single day. Again, the company's not growing a ton, so it is interesting to see that this is continuing to grow in value. It's 18 times forward earnings with relatively low growth. Not sure if that's a good valuation considering the growth is low. If we look at their market cap comparatively to the past, we can see that right now at 224 billion, they're sitting, they're at an all-time high. So if we go back, their stock price is at an all-time high. It's not all-time high. It's all-time high a few days ago, but point is that even their market cap is up there, right? You got to be feeling a little nervous when a stock has reached new highs, but it's done this several times. You hit a high, you get some pullback, you get a high, you get some pullback, get a high, you get some pullback. But it's this yo-yo effect of you're just continuing to slowly get up this mountain here. So I think you're gonna see a pullback. It may challenge a previous low. It may kind of pull back into this 180 range, 200 range. I think it will challenge this last high just based off of some of the previous historical way this has moved in terms of market cap. So just pay attention to that. I'm not sure if I would be buying just based off of this specifically alone. One thing I wanted to cover before I wrap up here, on the annual revenue estimates for the next fiscal year, so for ending of May 2022, analysts are estimating $4.21 billion. If we compare that to our year end of 40.4 billion, so 40.2, let me use my little calculator, minus the 40.4 over that $40.4 billion. This is going to give us our growth anticipated for the next year at 4.4, almost 4.5%. So historically, if we look at this growth historically, this is actually a lot higher. The last time they achieved 4% growth, actually they haven't achieved 4% growth. Well, let me look at the fiscal year. 4% growth was last achieved in the year ending 2018, and then last before that was in 2012. So this is a rarity among, for Oracle to have that type of growth, at least historically. So that is a good thing for the stock in the short term. If you look back at the revenue estimate for the next year, it looks like it goes up another $1.5 billion. So a little slower in terms of revenue growth. So if we divide, that's probably more in the 1%, or sorry, the 3% range. So again, not a high growth company, not a super. They're not completely stagnant, but they're definitely not a growing tech company. All right, so I want to talk about the things I like about Oracle first, and then talk about some of my reservations second. So the things I like. They have low single digit growth for the first time in a couple years. They had a dip in 2020. In 2021, they were able to, for fiscal year 2021, they were able to get out of that slump. For the next 2022 and 2023, they're anticipating low single digit growth, 3 and 4%, or 4% for 2022, 3% for 2023. And so that's great in terms of historically what they've been able to achieve in growth. On the shares outstanding, retiring 8% since last May, that's outstanding. I love seeing buybacks of shares. There was a dip in their share price. They definitely were aggressive and bought back more shares. They have a history of the last 5 years of purchasing back stock. You love to see that as a shareholder. That's excellent. Love to see that. Now let me talk about some things I'm concerned about. Now, if we look at some of the ratios of price to free cash flow and price to earnings forward looking, I think those look good if I compare those to other tech companies. I don't know if it looks good if I compare Oracle to itself historically. So you definitely want to be cautious there. The price to free cash flow, the price to earnings, they look good on paper, but when I compare them historically, they look a little bit outpriced. Now, if I take that same type of logic and I apply it to the market cap, their market cap is where it's been highest, and if we look historically on what's happened to market cap comparatively to the stock price, you can see that it's just kind of been a yo-yo up. So it starts to go up a hill and then it dips and goes up the hill and goes dips and goes up the hill. So definitely concerning there. I think they did beat on their estimates. They did a really good job during this quarter. I think people are just taking money off the table. You sell on good news, buy on bad news, type of trading. So you may want to let this one dip a little bit more into like the $200 billion market cap range before you could consider buying. I personally would do that. I don't own any Oracle, but I may consider buying if it dips into that range. Hopefully you found this information helpful. Thanks so much for watching. Frank Finance.